Okay. So we should go live any second. How's things your end? All
Yeah,
good?
all good. No
Yeah.
comments yet. Yeah. Busy this end, James. So can't
That's
complain.
good. Yeah, no, I know we reading between the lines you seem busy, which is a good thing because I know that when we used to mess each other, we used to get back to each other, and now it's like a day or two's pause sometimes, but it's my fault, apart from anything else. So, it's a good thing, right? It's a good
Yeah,
thing. Cool.
much rather this than twiddling thumbs.
Exactly, which is the opposite. That's the two extremes, and I'd rather be busy any day. Awesome. Okay, welcome everyone. So this is Mike and I's brief synopsis discussion of Rishi Sunak's budget and what it means for dentists. As of last week, when Rishi Sunak announced the budget, what does it mean? What does it change? What's changed? There was a few things that we thought would change, but they didn't really. There wasn't a whole lot in there that was drastically new. Mike will know more than me. I'm going to hand over to Mike in just a second. Lots of people will know Mike from the group already, but Mike, it might be nice for you to do a little bit of an intro for those that don't.
Thanks, James. Mike Bryan from Humphrey & Co. We're a firm of chartered accountants, tax advisors. We're general accountants, however, we have a big speciality in dentistry. We act for about 1,400 dentists nationwide, all the way from young FDs coming out of FD school all the way up to corporates owning 10, 20, 30, 40 practices. So holistic approach to dentists. And I want to speak to you today about the budget update, or the lack of information in the budget update. I think it was actually quite not simple, but there wasn't much information. I think I expected a bit more negativity, and it seemed to be very positive. Rishi definitely spinned it a positive way. Of course, Labour have spun it the other way, as is their job. But the main thing, I think the three things that I wanted to mention that nothing changed on, which were concerns, is obviously tax relief on pensions. James, I don't know if you heard any rumours of them removing tax relief on pensions, and they haven't.
I hadn't heard that. I was mainly concerned about the capital gains tax side of things, but you'll no doubt cover this in just a moment. But from what I could see, it wasn't touched. But anyway, back to what you were saying. No, I didn't hear that, to answer your question.
So there was some rumours that they were going to remove higher rate tax relief on pension contributions. So you'd still get your basic rate tax relief, but you wouldn't get your higher rate tax relief, which would almost be not the death of pensions, but would make pensions very much less attractive. And that's obviously a negative for the government, because let's face it, the state pension isn't going to be sufficient for most people to live on in retirement. So that stays. Capital gains tax very much was left alone, which is a good position, definitely. So your £12,300 remains CGT free. No change in CGT rates. It's still 10 or 20%, depending if you're a basic or higher rate taxpayer. No change to business asset disposal relief, which is the new entrepreneurs relief. So that still remains for those of you that have dental practices and looking to sell at some point in the future. You will pay 10% gains on the first £1 million of gains. And income tax rates. Income tax rates haven't changed. There wasn't a rumour that they would change, but they haven't changed, which does bring us into the one that we did all know about, which is national insurance. And national insurance has changed, or will change. And it will change April 2022, and it will go up by 1.25%. Now, it's a short-term change in that next year it is a 1.25% increase to national insurance. And then the year after, it's a new tax. Essentially, it's a new national insurance. And the reason they're doing this is it's really easy to bring in quite quickly to increase national insurance. But what they want to do from April 2023 onwards is penalise those people that are still working after state retirement age. So if there's any older dentists listening, at the moment, once you're post-state retirement age, you don't pay national insurance. When this new national insurance rate comes in April 23 onwards, you will pay 1.25% national insurance. And for anyone that's not above state pension age, it is just an increase of 1.25%. And that is on sole trade, employee, employers, and dividends. Okay, so there's a bit of a double whammy if you're a employer. If you employ people, you've got to pay 1.25% more national insurance on your dividends you take from your company, on your net profits you get as a sole trader, but also 1.25% more on the national insurance you pay for your employees. So it's actually a 2.5% increase in tax.
I see. Interesting. Good to know.
Yeah, and dividends, it was the one that actually we weren't sure whether it was going to affect dividends. It is going to affect dividends. So those trading as a limited company, you can't avoid it by taking dividends out. Your dividends will go up by 1.25% as well. There's still a benefit to those that are sole traders and are thinking of incorporating and trading as a limited company. There's still a benefit because corporation tax remains at 19% for now. And it's only when you take money out of the company, you'll pay that increased 1.25%. So if you're thinking of putting money into a pension, in investing in dental practices or buy-to-let properties, and you're leaving the cash within the company, actually, you're not going to pay that 1.25% on that money.
Awesome. Thanks. And I sense there's more to it than that, but by your draw of breath just now.
I can go for hours, James. I can go for hours, absolutely. Now that's the end to the national insurance. Did that make sense, James? Any questions on that?
No, it did. Very well explained. Very well explained. I'm just going to jump in and say one thing. I'm just going to say hello to the people that have posted some comments, because I always feel terribly rude when I can see the comments up and people are saying hi and we don't have an opportunity to respond. So I'm just going to use this brief interruption in proceedings to say hello, Adrian, and hello, Rohit. Thanks for joining us today, and good to see you both as well. And then back to Mike. I'll throw the reins back to you, Mike.
Thanks, James. So national insurance, that is the be-all and end-all of it. Okay, you can't get away from it. You do need to start budgeting from April next year for a higher 1.25%, or 2.5% if you're an employer. This next one is a bit niche. Okay, so if you're a sole trader or a partnership, and you don't have a year end of 31st of March or the 5th of April, okay, HMRC's official year end, the tax year end, is the 5th of April, and HMRC allow the 5th of April and the 31st of March to be the same date. Okay, they don't differentiate between the two dates. They class them as the same. I don't know. Well, I do know why, James. It's 5th of April. It's the tax year, I think, a long time ago was the 31st of March, and then they found out that we're actually a few days short in the calendar year. We're going a long way back, 1500s, 1400s, something like that. And then there was a few extra days brought in, and then it went to the 5th of April or something like that. So, and they haven't changed it. I don't know why they haven't changed it. It's just an absolutely bizarre date to work to. Of course, most people pay, the NHS pay to the 31st of the month. Most people pay to the 31st of March. Therefore, most accounts will be drawn up to the 31st of March, which is indeed the same date as the 5th of April in HMRC's eyes. Now, you choose when your year end is. It does not have to be the 31st of March. You can choose any point in the tax year. However, the Office of Tax Simplification have said that if you don't have a 31st of March year end by 2024, I think it's coming in, we are going to force you to go to a 31st of March year end. And that's going to cause a big catch up of tax. I won't go into the details on it, but if you had a 30th of April year end, you would pay tax almost a year later than someone that had a 31st of March year end. Okay, it's always been a very clever bit of cash flow planning in order to change your year end away from March. We don't tend to do it for a lot of clients deliberately, because when you come to retire or sell, you have to pay 2 years worth of tax in a lump sum, and therefore actually for dentists it's easier that they just pay their tax as they go rather than paying it late, because they don't understand the theory that when they come to retire, they're going to have to pay 2 years in one lump sum. But there's definitely dentists out there that don't have a 31st of March year end. And if you don't have a 31st of March year end, come April 23 or April 24, you will be forced to go to a 31st of March year end. And you will have to pay tax on the catch up. And you will get a gracious period of 5 years to pay that catch-up tax on a straight line basis.
Interesting.
Yeah, so to reiterate, if you're not 31st of March and you are a sole trader, you need to think about changing your year end or doing a cash flow forecast to understand the impact to you when this new rule comes in, because it's going to be pretty expensive for those people.
100%. Yeah, awesome. More to it than that then?
Yeah,
or
a few more bits.
Yeah,
I mean,
more.
That was quite one that's probably not well known. The other two that are quite easy, three that are easy to talk about, and then we'll finish on an actual calculation on the corporation tax, or an understanding of how the increase in corporation tax is going to work. National minimum wage is increasing. So again, a impact for those employers out there, those principals out there. It's going from, let me get the figures right, £8.91 to £9.50. If you have apprentices, so dental nurse apprentices, then they can be paid less. If they are young, i.e. under 22, then they can be paid slightly less than £9.50. But if they're over 22 and they're not an apprentice, they need to be paid a minimum wage of £9.50. And most principals out there will understand the difficulty of finding good nurses, good practice managers, a good dentist at the moment as well. It's really tough recruitment stage at the moment due to Brexit, due to better dentistry in different countries, and therefore foreign dentists not coming into the country as much. I don't know the average staff dental nurse wage, but I don't think it's much higher than £9.50 outside major cities. And this increase is obviously therefore going to impact on what you need to be paying your dental nurses in order to keep them in the job. They're higher skilled than those working in supermarkets and various other lower skilled jobs. So it may impact on your profits, because you may, in order to keep your recruitment, your nurses, you may just need to bump up their wage slightly.
Cool.
Making tax digital. Have you heard of making tax digital, James?
I think I have. But I'm sure you're gonna. You know what? I could attempt to explain what I think it is, or I can just let the expert take the reins. I'll do just that. Do the second one.
Thank you. Making tax digital has been rumoured to come in. I think it was supposed to come in April 21. It then got delayed to 22 due to Brexit. It then got delayed to 23 due to COVID. And now it's been delayed to 2024 because HMRC have bigger fish to fry at the moment. It's already around for VAT registered businesses. Okay, so if you are VAT registered, you will already know about this. But obviously most dentists aren't VAT registered. What it will mean is, again, only for sole traders or partnerships at the moment, it will mean that you need to report quarterly to HMRC rather than yearly to HMRC. You'll need online cloud-based accounting software, and you'll need to report your profit and loss 4 times a year, well, actually 6 times a year. Again, it's through the Office of Tax Simplification. They think it will be simpler. Their argument is it will be more accurate. What you'll do is you'll do 4 quarterly returns, you'll do an annual adjustment, and then you'll still do your annual tax return. So instead of going from 1 submission, you're going to 6 submissions. And of course, it is simplifying the equation. It's been delayed, so good news. It's been delayed by another year. It's now 2024, you need to worry about it.
Yeah. And what was the reason for that then? Because surely they're very keen to get that over the line.
They just haven't got the manpower. They're short-staffed, as every government body are. They haven't got the manpower to make sure it works properly. They're trialling it. They're obviously having some headaches with it. They want it to happen. It's going to be Big Brother's watching you. My theory is, at the moment, if you let's think of a dental practice for argument's sake. If you got Joe Bloggs in to paint your reception, and he said it's £1,000 if you pay me directly, or it's 800 quid if you pay me in cash. Yeah, probably doing something a little bit dodgy with that payment. What I think will happen in these digital tax accounts, in these Xeros or Sage or QuickBooks, these online platforms that will allow you to support making tax digital, is that when you pay Mr. Joe Bloggs, he's going to want you to put a UTR, his unique taxpayer reference, in there. In order for you to get tax relief, you have to put a code in for it to populate your expenses for you to get tax relief, and that will automatically expect Mr. Joe Bloggs to have the same amount of income in his digital tax account. I am theorizing here. that's the way I think it's probably going to go. It's the easiest way for HMRC to cut out tax dodgers by taking cash and not reporting it. And unfortunately, if all of the tax fraud that happens year on year was caught, we wouldn't be in a deficit at all, and we would be in a surplus. So
I see. Okay, cool. Makes sense. Fair enough.
Last one, well, no, actually last two, self-employment status of a dental associate, got absolutely nothing to do with the budget, but is a really important thing for dentists, associates, and for principals to look at. Have you done a webinar on it already, James? Were you about to say something?
No, I was just going to say IR35, right?
Yeah.
That's the one. Yeah, but no, interested to hear your slant on it. But we had a podcast on it the other week.
Oh, nice.
Talked about how it's changing, what we need to watch out for, how there needs to be clarifications on the terms. But you know what? The more information, the better. And actually, that podcast was before the budget, so you might have something to chuck on top of what we said.
Okay, nice. Well, my slant is that big corporates might be in trouble. I know that one of the biggest corporates has announced that they will not be employing their dentists. I won't name and shame them, and they are putting things in place to meet the employment status, or that meet the self-employment status. For those smaller principals and those associates that don't work for big corporates, generally you're probably fine. There's things you can do: have your own loops, your own equipment, make sure you have financial risk, so don't pay your associate a day rate. And then substitution is the big one. It's the big one that the corporates will go after. If you, the dentist, can appoint a dental friend to go into your practice and see your patients for 1 day a week, and the principal one day a year or more, and the principal allows it, the principal shouldn't not allow it. If they don't allow it, you're probably employed. And they continue to pay you, and you pay your dental buddy X amount for the day's work that he done, then that will protect self-employment status. So substitution is the golden ticket.
I see.
Some dentists, go on.
I was just going to say, so your view is that it might be necessary for dentists to do that once a year, just to foolproof themselves. So that in itself, that's different. That's something that's changed. But it is obviously going to be a workaround. Yeah,
absolutely, it is. But it will. That's self-employment status will indicate if you can send someone else in your place to do your work and you get paid for it, then it's generally self-employment.
I see. That's awesome. Yeah. So there's going to need to be this heightened awareness going forwards that perhaps that's what us dentists should be thinking about once a year.
There will be. The corporates are already working on it. They're already bringing out, big substitution pools that people can pull in different people from their database and get substitutions in there. You've got to think from a corporate side. If employment status came in, it would cost an extra 14% in tax on what they pay their associates, and the corporate model would fail, or dentists get paid less.
I hear you. Wow, that's interesting. And from memory, if memory serves me right, 2023 is when those IR35 changes are coming in. Is that right? Or is that sooner?
I think it might be 2022.
Oh, really? Okay.
Yeah.
Even sooner than I thought. Right then.
No, that's only relevant. Again, the rules are if the contractor, the corporate, is a medium entity or large entity. Yeah. So now you're looking at only the bigger corporates. Then it's the onus is on them to decide whether IR35 is applicable or not. If you're contracting with a smaller principal, just a single-handed principal, or a principal that owns, 10 or under practices, probably, then the onus is still with the dentist in order to ascertain whether IR35 applies or not.
Right. Okay. Interesting one. Awesome.
Yeah, so definitely an issue, but an issue that all dentists should be able to overcome with good advice and making sure they're putting things in practice to support self-employment status. And then the final one, like I said, there wasn't loads. Everyone's aware of this one, but I just thought we'd look at a kind of live example as to how to work out the impact of the increased corporation tax rate that is coming in April 2023. well, they say it is. There's already rumours that it won't. There's a vote beforehand, a general election, I believe, and it's going to be a vote winner if they say, oh, we've done better than we planned. 25% tax rate won't come in. We might, I don't know, go to 23%. So who knows? But at this moment in time, 25% corporation tax will come in April 2023. And what will happen is actually it will be, for most people, it will be between 19 and 25% tax that they'll pay. So the rules are, if you have one limited company, i.e. you don't control multiple companies, because that's different, and I'll explain that in a minute. But if you had one limited company, you're a dental associate, one limited company, and your profits were 100 grand, let's say, then you will pay between 19% and 25%. Okay. The rules are, if you earn under 50 grand, you'll pay 19%. If you earn over 250 grand, you'll pay 25%. And if you earn between 50 and 250, you will you'll pay between 19 and 25%. Okay. In order to work it out, if your profits do fall between 50 and 250, in order to work it out, what you do is you take the first 50 and you tax that at 19%, and then the amount between 50 and 250, you tax it at 26.5%, which seems a bit anal because the highest rate of tax is 25%, but it's because you get that 50 grand at 19% first. If you earn over 250, everything's at 25%. Yeah.
Oh, I see. Right.
The marginal corporation tax rate is 26.5%. So if you earn 100 grand, let's call it 100 grand, that's probably an okay amount for a private dental associate to earn. You would pay 50 grand at 19%, which is 9.5 grand. And you would pay 50 grand at 26.5%, which is 13.25. Therefore, your total tax is 22,750, which will be a 22.75% effective tax rate.
I see. Got you.
Yeah. So it comes in at between 19 and 25%. So you can now actually do the maths. If you're a company, you know what your profits are. You can actually do the maths to work out what that effective rate of tax will be using that percentage, 26.5%.
Very interesting and very relevant to us dentists. Awesome. Cool. Well, that's a very nice synopsis. And also, yeah, very good job of homing it into what it means for dentists, because that is what this page is about, of course. And you know what? I came on this webinar beforehand and I said, you know what? I didn't really think there was anything in there that affected us, but now I know that there is some stuff. So that is really good to know. And I'm sure there'll be lots of people sat in my shoes as well before they listen to this. Awesome. Okay, Mike, that is so good. Thank you so much for your day. And guys, if anybody's got any questions, feel free to pop them in the chat just before Mike and I round off. If anybody wants to reach out to Mike based on anything that he said, they can find him in the group, Mike Bryan, and we will of course put this up as a podcast, because this has just been a very impromptu Q&A that Mike and I just decided to do today about the budget, because we know it's so useful for everyone on the page. Okay, cool. Haven't got any questions, but that's totally cool. You'll know where to find Mike afterwards if you can dream up any questions, guys. Thank you so much for coming along today. Good to see you, Adrian. Good to see you, Rohit, as we said before, and anybody else who's joining us. And thank you so much to Mike for giving up some of his time today. Come and speak to us.
Cheers, James. Nice one. Take care.
Awesome, Mike. See you later. Bye-bye.
See you. Bye.